Alrighty, traders. Hey, traders. It's John Howell here. Welcome to another market update for you guys. One thing I want to share with you a bit of technical analysis of what's happening across the market as well too. But I also want to be sharing with you some of my long-term investing portfolio of what I've got in that long-term investing. I've talked about before in the past what my long-term investing portfolio consists of, and I'm going to share that with you today. What's actually in it. And so on and so forth. And I'm going to walk you through that so you can see where I'm positioned. And basically for you guys that have been following me for the last few years or more, you would know why I'm positioned I've been basically saying where I'm positioned this year, and I'm going to talk to you about that. So let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So if you are struggling with your trading right now and you do really need some help, see that trading course there? I'm giving you a free membership access to that. And again, it's if you need help with, if you're making losses right now, or you want to learn how to read the charts properly, or you're looking for a good trading system, because you should be trading off a trading system, then make sure you go grab it. Again, you literally get free membership access to that. So go to johnsfreegift.com right now, or that first link in the description, and you can go check that out. So one thing that I'll do a bit of a technical analysis here, guys, across the markets. Then I'll share with you a bit of my long-term investing portfolio and what I've got in it and why I've got it in it. Okay. Now this is something that looking at the S&P 500, the dangers that I see with the S&P 500 is that we're in what's called a no man's land. All right. So let me share something with you here. When I'm doing analysis on the markets, all right, and again, I do this with my private clients every single day. And when I'm actually doing my analysis on the markets and I'm looking for trading opportunities, again, guys, if you don't have a good trading system, that's your foundation. All right, you go to the market, look for your trading system, not just looking for anything. Okay. Again, that first thing in the description, go get access to that free trading course. I teach you my trading system for free. Just get the help you need. Okay, it's for free there. So the thing that I'm looking at the markets here, look, check this out. I want to share something with you here. Because sometimes when we're analyzing the markets, right, we're analyzing the markets and we're trying to see what's really going on with these markets. Okay, so we're trying to see, okay, is it strong right now, or is it weak right now, or what is really going on with these markets? And so what I like to do is I'm going to do a bit of an analysis here with you. I like to use a simple moving average on my daily charts. Right, this is just a 52 moving average. Why 52? It's just the moving average that one of my earliest mentors back 19 years ago when I first started trading, he used it, and I've just stuck with it ever since then. Right, it's been sort of my main moving average there. Because if you look at 52, there's roughly that's roughly 2 months worth of a moving average, right? So if you look at the moving average can give us a bit of, I like to use the moving average like a momentum indicator. Okay, it's like, because it's like, where is the stream? Is the stream strong in a direction, or is it flat, or is it in a direction but it's quite weak? Now what I mean by that is this. Okay, so. And again, I'm using this because I'm trying to gauge, because again, sometimes we don't know what's going on in the markets, right? Like no one definitely knows what's going on. So we're trying to use the tools that the best we can for our capabilities, right, of these markets to see where are things, what's really going on here, okay? Is there strength in this market here? Is there not strength in this market? And so what can we use? We can use the moving average. So if the moving average, use the moving average like a stream, right? So if the moving average is doing this, actually, I'll use the I'll use the blue because my moving average is blue here, okay? And so this here. So if the moving average looks like this, what's that? Where's this? If that was a river, if you were a surfer, would you want to go jump in that and catch some waves? You're like, John, it's flat. I'm not going out there, right? There's nothing going on. Perfect, right? So this is where you guys could actually start to use this for your own trading if you want to. Again, in that trading course link in the description there, you'll see the reason why this is actually rule number 2 out of the 4 rules that I look for to give me a high probability setup of it actually working out, right? Because that's what we want. Well, what are the setups that are going to give us a massive high probability? So whenever the moving average is flat like this, guess what? There's no momentum, there's no stream, there's no momentum, right? So why would you want to jump in on that one? You're just guessing, right? But what happens if we start to get a stream like this? Oh, now if you're a surfer, you're like, oh, look at that. The waves are breaking, right? You're a little surfer man. And then what I like to do is I like to do this, right? So I'm a little surfer man here. Got my little boogie board, surfboard, right? Surfboard. And so we can see the surfboard. But what do I like to do? I like to see, okay, do we have at least strong momentum in a direction? Or is the stream strong, right? Is there a lot of breaks happening? And then what do we do as surfers, right? We wait for it, we jump in on there, and then hopefully we jump in on this one here, and hopefully we start to see a move back up again, right? And you'll start to see here, right? Like for example, here, bounces off the moving average, bounces. See all these points through here, bounce. See what I'm saying through there, right? That's me as the surfer, right? I'm saying, oh, look, we got a very strong upward moving average. Means there's a lot of strong momentum behind it. A lot of the stream strong, right? You're a surfer, dude. All right, cool. Now, here's what's happening. So we have that, right? We have a very big, strong stream momentum. And this is where the moving average can give us a bit of a danger warning in the markets of something may not be right here. So we need to be cautious here. And what is that? Is that if we start to get that, but what if we start to get, if this is we're going to use strong and we're going to use weak. This here is like a strong momentum, right? This is a surfer. This is like, yeah, look at those beautiful waves. I'm going to jump in on it. I'm going to do all this sort of stuff. You know, it's beautiful, right? Oh my goodness. Look at the beautiful breaks. Nice, good, strong waves, solid waves, good, strong waves. Well, what if you went to the break? What if you went to a beach, right? You jumped a little surfer board. You went to the beach and you jumped on the beach, but the surf was doing this. Hang on a minute. If that's strong, then this has to be what? Weak, right? Now, it doesn't really mean anything. It just means that the best time to be jumping in on something is what? When the stream is strong, right? When the momentum is strong, using the momentum indicator. But when the stream's like this, you're like, I can jump in on it here, but I'm not too quite sure. Again, guys, in my trading system, link in the description there. I'm going to teach you for free. You'll see this is the reason why this is rule number 2. I don't just use this only for my trading setups, but it's rule number 2 out of the first rule. And again, I teach you all for free. But this is the reason why it's rule number 2, because if I'm looking for trades that generally have big, strong stream, right? Strong. Here we go. Strong stream, right? But what happens if the stream's doing that? Weak. It's like, I'm a little surfer man over here. I'm going to try to jump on this one here and I might catch a little wave. It's like, it didn't really do much. You know what I mean? This one here we go. This one here, no, I didn't do much. Here we go. Here we didn't do much, right? So what do you want to jump in on? Do you want to jump in on, here we go? Or it's like, it's not really too quite sure. Now, obviously the stream can start to pick back up from here, can't it? Or it can flatten out and roll over. But when we're analyzing the markets, as it is right now, what is it doing? So that's when we start to look at this here. So I'm gonna do some funky dunky drawing trend lines. Okay, we can actually. I've already got them on there, right? Look here. So let me just. Actually, I'm gonna move that out of the way. So see the moving average here. Look, if I just draw over the moving average from there to there, see how it was very strong, right? Strong like bull. Look at that point through there. Oh, strong like bull. Right? And even from here to here, notice the angle, right? I'm just going to draw over the moving average. That's like there. Right? So I'm looking at the upward legs here on this entire market here. The upward legs of this moving average. Again, guys, this is all about just trying to get some sort of understanding of what's going on in the market right now. So we could maybe be warned, or we could see what's going on, whether we actually want to even go in that wave at all, right? Again, use this analysis on all stocks. Not just the indices that I'm doing right now, but use it on all stocks. Why? Because if I look at the S&P 500 and I notice that there's no good strong momentum here and it's not giving me a good trading setup, guess what? I'm going to go check out McDonald's for a while. Actually, not to have the hamburger, right? The stock itself. I know what you're thinking. I was like, all right, you just went, John, you just went from a good surfer dude, which is healthier, to McDonald's. What's going on? Right? So what do we have here? See the angle? Remember I said before, there's different angles, isn't there? There's different angles. There is, if you use this angle here, that is what? Strong, right? Strong. Here we go, right? Here we go. Surfer dude. That's strong. But what happens when the moving average starts to do this? Notice the moving average. Look at that. Oh, look at that there. See the angle? It's different. And what about recently? What's happening right now recently? And again, guys, this doesn't mean anything. It just gives us a danger warning that something may not be as what we actually are seeing it as, right? And then we see what? Then we see this sort of move through here, right? So if I create that and move that over there, notice how we've actually got a different angle now, right? And especially this one here, right? Look at this here. See how that's it's a little bit stronger, isn't it? So we went from strong to slightly, like really strong, and now look at the angles, right? Very, very, very weak, right? Very, very weak, and so on and so forth. So the purpose of me bringing this up here is that it's very, 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 it's very choppy through here. And if you're trying to get in on this right now and trying to trade right now, you're probably getting your head handed to them because you're probably going to go long and then go short, go long, right? We're in a very, very, very choppy territory right now in the S&P 500. And that's and it could actually roll over to be maybe a head and shoulder formation. Like we just don't know, right? Shoulder, head, shoulder formation. Okay. So we just don't know what's going on there. So when looking at all the indices and looking at all the markets there, this is one thing that I'm always looking for to check out to see what is going on in the markets through there. Does that make sense? Right. So we could see that through there. And that's what I'm looking at from that perspective from there. So that's a bit of analysis of what I wanted to share with you on the S&P 500 today. One thing that I want to now talk about more about my long-term investing portfolio and why I'm positioned the way that I'm positioned, and I have been now for the last few years. I'm going to start off with this, guys, okay? So the first thing is I'm going to start off with gold, all right? Let's just start off with gold. Actually, that's silver. Let's start off with silver. Again, guys, this is long-term investing, not I'm trying to buy. I'm not trying to time the market or anything like that, et cetera, right? Now, here's the thing. If you were listening to me for the last couple of years, you would know that I've been saying that when crypto was and when Bitcoin was at 60,000 and something like that, I was saying do not be touching the crypto market. Look at gold. If you want to be doing something, touch gold. 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 Right? And so the whole thing about the gold market, right? The whole thing about that is that I actually have gold, and I've been adding gold for the last few years to my investing portfolio. I add every month, not to gold, but to my entire investing portfolio. But gold is actually in my portfolio now. Not actually the physical gold. I don't actually have the physical gold. I've just got the GOD. Some people say that's bad. It's up to you guys, right? But I'm just talking about my long-term investing portfolio and why I'm positioned the way that I'm positioned for that long-term growth. Okay, because of what's coming. Now, why am I in gold? Because what is coming? There's going to be why am I in gold? Not because I think it's going to be a good idea, right, or whatever. As looking at cycles and moving forward with cycle analysis, what is coming, right? One, we know that there's going to, if you look at history of inflationary periods, we always have what? We always have double dip inflationary times, right? Or double spike, should I say? Double spike inflationary times. So if I bring up the inflation here, and this is actually a really, really, really big thing, and bring up the max, you'll be able to see what? You'll be able to see that it's a double. Every time we get inflation, we generally get double inflation. We're probably going to get what? Another double inflation, which simply means we probably may come down a little bit more and then see another double inflation, right? Now, this is from now through to 2030 view, okay? Now through to 2030 of what's likely to happen. If I look back, if it's 2030, I look back, what's probably likely to happen. So that's the first thing I do see why gold is going to do really well in this period of time, okay? So that's the first reason. The second reason is that gold tends to have big moves before recession, right? So I was talking about this with actually my private clients here. Oh, by the way, guys, if you're interested in becoming a private client of mine and you want to actually watch me trade live every day and see the trades that I actually do, and also when I do add to my positions there, then that second link in the description, getjohnshelp.com. There's an application form there. You can fill that out. When you fill out the application form, I will call you to see if you're a good fit. But also on the other side of that page, I've got a complete, I think it's like 4 or 5 videos It's like a master breakthrough trading course that I'm going to give you for free as well too. Just for applying for the coaching program. So if you do need some help, guys, and you're struggling right now, that second link in the description, click on that. If you want to get access to my trading strategy, my scanning process, and also have the chance to see what trades I'm taking every single day, or when I actually am trading, and also when I'm doing my long-term investing, like I did today, I actually added. That was yesterday. I added to my long-term investing portfolio that I'm talking about right now. Then again, second link in the description, click on that, go over there, fill out that application form, and as soon as you click submit on the application form, you'll be booked in for us to talk on the phone to see if you're a good fit. But then on the very next page, after submitting that application, you're gonna get access to a page that is like what I call my master breakthrough trading course. I'm gonna give that to you for free to get you going straight away. So therefore, I see gold tends to have big moves, right? Gold tends to have big moves. So this was 07 period before what? The recession came down, and then we had the next move up. I'm actually expecting something similar like this as well too. Gold has a big move, then we have the recession, and then we have the what? And then we have the second leg coming in the markets, right? So first leg here, second leg was the pullback, third leg was even bigger. First, second, third. I'm seeing the exact same thing. One spike into recession, two recession, three reflation. So I'm seeing that happening from there. And the third thing is that we don't know exactly when, but we know the government is going to default on their debt. And when that happens, whether it's 2027, 2030, 2032, we don't know exactly when, but when that happens, guess what's going to happen to gold? It is going to go ballistic. Absolutely ballistic. Okay, so there's the reasons why I'm a gold bug in there. Okay, and obviously I've got silver in there as well too. So have a look at the silver price. I've got silver in there as well too, and silver's actually just starting to really show its head right now. So everything's starting to change now with the silver and the gold market as well too. So that's the reason why I've got that in there. Okay, guys. Now, when it comes down to the mining sector, all right. So I've got that in there, silver, gold. Now let's go have a look at the GDXJ. I've always said on the GDXJ that I'm expecting really big moves. Let me talk the reason why I have GDXJ in my portfolio. One, because I see that we're going to go through another mining boom, right? Simple as that. Let's keep it really simple. We haven't had a mining boom in over 10 years. So what's coming for the next 10 years? Another mining boom. It actually is that simple. Right? Now, I always say from now through to 2030, we're going to go through another mining boom. We may be starting to see the starting of that move right now. But as I said before, this is a weekly chart, right? So it takes many weeks for bottoms to form and so on and so forth, right? So that's the reason why GDXJ is a large percent of my portfolio. One, because I see I see that there's going to be another mining boom coming. It's just going to happen. We're never going to go through another mining boom. Secondly, and secondly, you can see we're actually at all-time lows through here. And thirdly, if you understand anything about the markets, I talked about this before, whenever you see the markets do nothing for 10 years, guess what's coming, right? When the market does nothing for 10 years, this is like you resting, right? You resting for 10 years. Then guess what? What's coming for the next, maybe not 10 years, but when this starts to break out, what's coming? Rest, explosion, right? And so therefore, mining boom, which is just simple. So, we go through mining booms, then we go through mining crashes, then we flatten out a bit. Mining boom, mining crashes, flatten out a bit. Mining boom, right? So and this is the reason why last year, when we were through this period through here with the crypto market, or the year before maybe, I was saying just buy gold from me, buy gold, right? Buy gold. So that's why I've got that in there as well too. So that's part of my process. And I do actually have one mining stock, and that is Barrick Gold. Now I got in on Barrick Gold down the bottom here, and I know this doesn't, you're probably not going to believe me, but it doesn't matter. My private clients saw me do it this live. So down the bottom here, around that $16 period, as we actually had this move up, and then we had the pullback, I said, now's the time for me to actually add this mining stock to my portfolio. I want to add one mining stock. And so therefore the gold mining sector, this gold stock is actually in my portfolio. I bought it down here, and then we've had this move up ever since. I haven't added any more to this one here, but I did start a position on the gold there, because I do see the mining sector having a really big move, and I do see the gold, this actual gold stock, actually doing really well in the markets. Make sense? So again, guys, I'm just seeing where things are likely to be heading over the next, what's likely to be heading over the next, say, 5 to 10 year period, and positioning my portfolio for that. Now, what is also going to happen, right? So let's actually bring this up here. I want to share this with you. So if we have a look at the interest rates, right? If we have a look at interest rates, and let's actually just bring up the 10-year as an example. I'll bring up this is a 10-year as an example. What's inevitably going to actually happen to interest rates? What inevitably is going to happen, right? This is the 10-year, but what's inevitably going to happen to interest rates? They're going to what? They're going to come back down, aren't they? Not just the Fed funds rate, but the long-term rates. The long-term rates may be already getting ready to have a move on the downside, right? So with that being said, as we start to see the long-term rates start to come back down, especially in the recession, and we start to come back down because they start to do the rounds of QE, they start to bring the interest rates back down to try to jumpstart the economy like they do. Guess what? As the long-term rates come down, we can start to benefit from places like TLT. So over the next 2 years, as we go into the recession and so on and so forth, and we're doing all sort of stuff, places like the long-term rates are probably going to start to come down. They may have been started right now, right? So for me personally, TLT, or the one that I like, is TMF. This is the one that I actually am in. I really like this one for a position. Well, actually, this is the one that I've been adding to for quite some time. This is actually, I've got a really, really big position in the TMF position because of what? See what I'm saying here, guys? I'm not trying to, I'm going to buy Tesla because I think Tesla's going to be worth more than blah, 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 right? No, I'm not going to do blah, blah, blah. I want to say, okay, what is cycle analysis telling me? Where's the puck going? And so I can just slide into there. We know they're going to, like, for example, this one here, TMF. We know that the Fed's going to start dropping rates. We know the long-term rates are going to start to come down. They may even start to come down right now, especially when they go back into doing QE again, right? To what? To bring the long-term rates down so they can buoy the economy. As they buoy the economy and bring the rates down, the TMF and TLT start to do this on you. Make sense? So there we go, guys. There's a bit of an update across my portfolio as I said before. So guys, if you just want to get started, or you just need some help with the markets, grab that free trading course, link in the description. Or if you do want to actually, get some private coaching from me, like from now through the rest of this year, actually get private coaching from me, get access to my scanner, get access to my trading strategy, and me coach you every single day or every single week, and also have the chance of actually to every single day log into a small group of people that I have, just a real small group. It's less than 15 people right now, where you can actually watch me and see what I'm actually doing, what trades I'm actually getting into. When I do get into a trade, when I'm doing my investing trades, what am I adding to, what am I buying, and so on and so forth. If you're interested in that, second link in the description, or go to getjonshelp.com, getJOHNS help.com. Fill out that application. When you fill out the application form, you will be booked to then having a call with me personally, that is. I will speak to you on the phone to see if you're a good fit. But then also what's going to happen is that as soon as you fill out that application form, on the very next page after you click submit to the application form, I'm going to give you're going to get instant access to what I call my master trader course that I've got in there to really get you started even before we actually start to talk on the phone. So go to that right now, guys, and I'll see you real soon.